Revlon stock is going crazy. Over the past 5 days, Revlon went from $1.25 all the way up to $9.89. In this video, we're going to talk about why Revlon stock is blasting to the upside, all of the important details you need to know, and we're going to take a look at this stock because hundreds of millions of shares are being traded of Revlon stock over the past couple of days, and everyone's talking about it. So let's get started. Revlon, it's a cosmetics company. I'm sure you heard of them before. They do a lot with cosmetics and beauty and all that stuff. But here's the thing. Revlon actually filed for Chapter 11 bankruptcy last week. And what's interesting about this is that they are going to continue their operations and they're going to try and reorganize their debt. Looking at Revlon's fundamentals, they're pretty rough. As of the most recent quarter, they have $70 million in cash and they have $3.44 billion in debt. That is not good, yet the stock is blasting right now. Like I said, it went from $1.25 all the way up to $9.89. Why is this happening? We're going to talk about it in like 2 minutes. Stick with me. I also want to point out how they have $2.37 billion in total assets and $4.45 billion in total liabilities. Again, it's looking pretty rough. And you know how I just said they have $70 million in cash and they have $3.44 billion in total debt? There was actually a testimony where people are saying that Revlon actually only has $6 million in cash and it's struggling to fulfill retail customer orders. So fundamentally, it's brutal. Now, here's the thing. A lot of people are rushing into this stock for a couple reasons. The first one is that India's Reliance Industries is considering buying out Revlon. Now, these are just kind of like rumors. Nothing major has passed. There's not any major talks just yet, but buyouts normally bring in some good buying pressure. But the main reason Revlon stock is running up so much is because this company's float is extremely small. They have a shares float of 5.4 million shares. That is very tiny. So basically what that means is anytime you get any sort of hype, whether it's positive hype or negative hype, the stock moves a ton because there's not a ton of shareholders out there in the open market. So check this out. We can see how Revlon stock, this purple line right here, has performed over time, and then we can see this blue line and this like purple line on how they moved over time. This blue and purple line right here represents the short interest of this stock. So basically when these lines shot up, it showed when everyone, mainly institutions and hedge funds, when they started to short the company. So they shorted when the stock was around like $5 to $6 or so, and for a while they were making a ton of money because the stock fell all the way down to like $1.25, but now it's completely reversing because we're starting to see a short squeeze and a gamma squeeze on the stock, which is exactly what we're seeing right now. So the main point to know is that Revlon, the stock, has a very little supply of total shares. So whenever you see, strong momentum, either buying the stock or selling the stock, it moves very easily. And the problem the reason this stock is moving so much is because similar to other short squeezes in the past, namely AMC and GME, the short float is insane. So the short sellers got way too greedy and they shorted way too much of this company. 53.7% of this company's entire short float is being held short. That's a lot, and that's like asking to be short squeezed. So basically what we're seeing is, we had some hype initially start off from the bankruptcy, but then once the stock started to move up, the short sellers had to cover. And how do they cover their stock? They have to buy it, which makes the stock go up even more. And then retail traders and day traders see the stock moving up and they buy it, which makes the stock go up even quicker, which makes shorts even have to buy more and more to cover their position. And while all of this is happening, we are seeing other day traders and other hedge funds and institutions and mainly retail traders buy out of the money call options. So when they buy these out of the money call options, like let's say the 10 strike call for July 15th, over the past what is this, the past 4 trading days, these went from $2 up to $250. That's an insane jump, and everyone's saying, well, if it went from $2 up to $250, what's stopping it from going from $250 up to $1,000 or $2,000? And they buy those call options, which in turn makes the person or the institution who shorted those call options have to buy shares in order to hedge themselves. So the main thing to take away is that short sellers got way too greedy. Hype came in because of the bankruptcy news. The stock started to run up. When it started to run up, hedge funds and the people who shorted the stock needed to buy shares to cover and hedge themselves, which made the stock go up even more, which is why we're seeing this whole situation. And what really amplifies this whole situation is not only are we seeing shorts get squeezed, but we're also seeing a bunch of people search about Revlon stock. This chart right here shows the search, I guess you could say, search trends for, the search term Rev stock, which is a ticker symbol on Google. It is blasting up right now, more so than like any other time period over like the past year, especially, and like even the past 5 years. So everyone's talking about it, which is making it go up that much more. So looking at Rev stock, it actually got halted today for a brief period. It was only a 5-minute halt, but the stock is up 40% today, and it's lingering right around $8.50. Like I said, they're bankrupt. The company is in a really bad position. So in terms of like buying and holding this, I think it's a very bad idea. I mean, look at the fundamentals. They have, reportedly $6 million in cash. I know they got that loan, but if we look at the most recent quarter's data, they have $70 million in cash and $3.44 billion in total debt. That's a problem. So I think we could all agree, for the most part, if you're looking to buy and hold this company for the long term, it's not a good idea. It's extremely risky. However, there have been a couple situations, especially over the past couple years, where when hype comes into a stock, it really, really runs up. Redbox is a good recent example of this. They are set to be taken over, and the stock was trading at an insane multiple relative to the buyout price, but it moved up because it had hype. So Revlon has that same hype. It can keep blasting up. No one knows when, but or how much, I should say. The main thing is that this should only be traded for the short term. Now, what's very crazy, like I just said, is that this stock will move in extremely volatile ways, and it's like the main thing to know is that the total shares float is only 5.4 million. Yesterday, the total volume was 186 million. So if you think about it like this, the total shares float, you could think of that as like supply, which is 5.4 million shares. But the total demand yesterday was 186 million. And I know total volume doesn't necessarily equate to total demand, but the main thing is that there's not a ton of shares out there. So when you see big demand spikes, this company really moves up. So here's the thing, looking at Revlon for a short-term trade. I cannot emphasize this enough. Don't hold this long-term. You're going to get screwed over. For the short term, there's opportunity considering how much it's moving. So here's the thing. Revlon stock, it's above $8 right now. It's a pretty decent support level. There's also pretty strong support right around $7 and even a little bit around $6. So it kind of lines up in a pretty even format. 6, 7, and 8 are pretty strong support levels. In terms of resistance, there is a strong resistance right between the range of $9.89 and $10 per share. There's also resistance right around 12. Keep those levels on your radar. The implied volatility on this stock is booming right now. So for that reason, I do not recommend trading call options because they are insanely overpriced. Think about it this way. The Revlon 10 strike call option right now is trading for $1.40. That means if you buy the 10 strike call for Revlon and you hold the expiration, your break even isn't until $11.40. That's like a $3 increase on an $8 stock. That's way too much of a premium to be paying for such a company in a situation like this. So here's the thing, it has resistance right between the range of $9.89 to $10. The next resistance is 12. We already outlined the support levels, but this is a total hype play. It can keep blasting up. No one knows for sure, obviously, but it has a ridiculous amount of momentum. In situations like these, in the past, when the momentum's there, it really, really, really runs as we've seen over the past couple days. But when that momentum dies out, the stock and the company normally craters. So be careful with this one. Hopefully this video cleared up everything you need to know. Definitely check out that first link in the description and the comments down below. We have an awesome tool that lets you see anything you could possibly need related to analyzing a stock. I looked at Revlon right now. I easily got access to their total cash, debt, liabilities, and everything else I could possibly need. With the tool I'm showing, you can also calculate your own price targets and look at anything you could possibly need for a company. So definitely check it out. You can cancel it any time. I use this software every single day. It's awesome. Definitely check it out. Let me know what you guys think about Revlon stock. And thank you guys so much for watching.